A lot of traders think that the money is made at the entry. But in reality, a huge part of profitability comes from what you do before the trade and after the trade. Most traders lose because they only focus on entries, setups, and the charts. But real consistency comes from having a full process. A real trading system is not just about the strategy, the entries, or technical analysis. It also includes the preparation, your risk management, your execution, your journaling, your review, and how you manage your trading psychology. You need the full package. And that is exactly what you're about to see in this lesson. I'm going to walk you through my full trading routine, and along with that, I'm going to give you a simplified mechanical trade plan that you can use right now. So you can see how all of this fits together in the real world. So with that being said, let's get into the lesson. So up until now, I've shown you guys the concepts. I've shown you guys the framework and the logic behind my system. But now I want to show you what this actually looks like in real life. So I'm going to step away from the slides for a minute and walk you through my full trading routine on Edgeflow. What I do before I trade, during the trade, and after I trade. Because this is where I'm going to drop some serious sauce. Okay, I'm going to give you the entire simplified mechanical trade plan, and this is really the part which will give you the structure you need. It tells you exactly what to look for, when to act, and just as importantly, when to stay out of the market. So in this lesson, I'm going to walk you through the exact pre-market routine that I personally use to lock in before I take a single trade. So on Edgeflow, there's this function to actually conduct your pre-market routine via this pre-market routine banner that we have right here. The reason why we have this pre-market routine banner is because we want to enforce your pre-market routine. We want to make sure that you are doing the same actions every single day to prepare yourself to get into the right state of mind before you actually start trading. Right? Like I said, consistent actions equal consistent results. And this pre-market routine banner is fully customizable in the settings. So when you go to settings, you go to your pre-market routine banner. This is where you can select the steps that you want to be included into your pre-market routine. You can delete and remove any steps you want. You can add any steps you want. Once you have finished customizing your pre-market routine banner, you can just press Save Changes and it will be reflected right here. You can also choose the time in which you want it to reset on a day-to-day basis, right? So we highly recommend you to set it to 1 hour before your trading window. So for me personally, I like to start trading at 3 p.m., which means I want this pre-market routine banner to appear around 2 p.m. So this is where I will come here and then I'll set it at around like 2 p.m. just like this, so that it appears at 2 p.m. every single day, reminding myself that I should do my pre-market routine. And also like this banner persists until all of the steps are actually completed, right? So this once again forces you to complete the steps that is on the pre-market routine banner. Right? So once you complete all the steps here, it will disappear so you can focus on your own trading. Now let me walk you through my entire pre-market routine step by step. The first step is obviously to check the economic calendar, and I do so by going to the news feature on Edgeflow. This is where I want to be filtering it by the currency pairs that's on my watch list. And then I also want to look out for the high impact news. All right. So this is where I see, okay, around 7 a.m. there's a high impact news coming out for GP, and then around like 9:30 a.m. there's another high impact news coming out. So this is where I'll tell myself, okay, cool, these are the times that I won't trade. And to take it even one step further, like to make it more easier for me to not trade during this timing, I will set my block trading window here, right? So this is where I can block trading for high impact events that is regarding the currency pairs on my watch list, and I can choose to block it 15 minutes before and after high impact news release. So that's the first step. Ta-da, done, check it off. The second step is to review your trade plan in Edge, right? So this is where, as you can see, second step, review my trade plan. This is where I come onto my banner over here and I will open up my trade plan and I will go through step by step. I'll go through my charting process, go through my entry criteria, go through my trade management rules, exit criteria, everything, and just read it. The goal here is to just get crystal clear on your process before volatility starts hitting, right? And then once done, mark as review here. And then this is where I can check off like the second step of the pre-market routine itself. The third step is to analyze the charts with my trade plan right by my side, right? So this is where on Edgeflow, there's this feature that allows you to actually set a trade plan that you have created to active, just like this. And when you do so, it appears in your trading panel right by your side. This way you are able to analyze the charts, you're able to follow the charting process on here, right? So for example, the first step is to mark out my higher time frame range. This is where I mark out my swing range, you know, my swing low, my swing high, so on and so forth. Just continuously like follow this charting process that I've laid out right here. And then once I'm done with all the chart markups, this is where I will end off the section by stating my daily bias, you know, whether I'm bullish, whether I'm bearish. If I'm bearish, where do I want to be entering the sell positions at? You know, where do I want to be trading from? Maybe I want to enter for a sell right here. And why am I going to be selling at this price point here? Okay, so yeah, this is where, you know, I can just set an alert at this area here as well, like maybe at the edge of this zone here, set an alert at 0.705. And then once price hit that 0.705 right there, it triggers my alert, it sends me a notification, it asks me to actually open up my charts to look for my trading opportunity. And then this is where I will wait for my entry criteria to appear into the charts, right? Wait for my entry models to appear on the charts itself. And then once I got the confirmation to enter for the trade, that is where I will enter for the trade right there and then. Okay. And also, like, just make sure that before you enter a trade, you review your exit criteria, you review your trade management rules, so you know exactly where to get out of if the trade idea does not go well, and also if the trade idea does go well. And also just review your trade management rules to just know exactly how you're going to be managing the position once you are in the trade. Yeah, so this is where I do my analysis, I do my preparation, I do my chart markups, I do my research, just so that I can prepare myself, so that I know exactly where I'm going to strike, right? So I know exactly what I want to see the market do in order for me to actually enter for a position, right? So this is once again just part of the preparation process. In the next lesson, we're going to talk more about how to execute trades on the trading panel itself, you know, how to actually enter for a buy and sell on AdFlow. Here's a bonus thing that you can do, right, as part of a pre-market routine. I didn't put it in here, right, but this is like a little thing that I do during the pre-market routine. What I like to do is to check my existing positions, right? If I have any positions that was open, you know, that I held it overnight, this is where I come in here and just check how is it doing. And then this is where I might even want to like move my stop loss or take profit, right, if my plans actually allow, right, based on the new information that is reflected on the market itself. So that's done. Analyze the charts, right? Like I said, this is the step where you do your chart markups, right? You determine what is the price point in which you want to enter the trade on, and then you just wait for price to get to that price point. And then once it does, you trade. If it doesn't, you don't trade. As simple as that. The next step is some form of meditation or some form of breath work, and that is where I do it in the sanctuary, right? So this is the last set of the pre-market routine because I want to shift my state of mind. I want to shift from from analysis mode to execution mode, right? Because like I said, you want to make sure that you prime your state, right? You want to make sure that you get into a state where you are going to be trading like an absolute machine. This is where you can downshift, you can calm down your parasympathetic system, you can calm down your anxiety or any emotions that you are facing, and overall just reset back to a mental equilibrium before you start trading. So this is where I will do like a quick little 15 minutes meditation, right, to clear my mind, to ground myself in the present moment, so that later on when I go into the charts, I can see the market for what it is, right? And I do that through this meditation timer right here, okay? Because it's very simple, just come in here, sit down for like 15 minutes. Once done, this is where I will check off the last step of the pre-market routine itself. So that's the entire pre-market routine, right? And you can see, notice how the pre-market routine button just disappeared, right? Because you have completed your pre-market routine, and now we want you to focus on execution. We want you to really just get into execution mode, get locked in, and just do what you need to do. And before you start trading, I want you to ask yourself these 3 questions, right? Just to check yourself. Am I calm? Am I clear? Am I following my trade plan? Would I still take this trade if I was up big today? If the answer is no, if the answer isn't clean, if you're like, I don't know, you know, maybe, then you need to do more preparation. You need to do more research. And you also need to make sure that you calm your inner state. And you do that by performing some form of meditation, or even like checking out like the 60-second reboot box building exercise that we have given you here in the Sanctuary feature itself. Now you know exactly what you're looking for and what you're ignoring, right? Like I said, the hard part about trading isn't spotting A+ setups, it's in ignoring everything else. And when you perform this pre-market routine, this allows you to spot A+ setups better, right? Because now you're preparing your charts, you know, okay, if price comes up here, and it does this, okay, this is my A plus setup. That's a confirmation. That's my trigger to actually execute the sell position itself. And most importantly, you also know what are the market conditions in which you want to avoid. What are the scenarios that you just want to stay out of the market and do nothing? Because the most profitable position in the market is waiting. If you can just wait for a trade idea to present itself, this just allows you to have a huge competitive advantage over the people who just trade for the sake of trading, to just trade for the sake of adrenaline, right? For the sake of gambling. And that's how you just really open up your awareness and you're able to recognize the opportunities when they shows up. Just go out there, do your pre-market routine, because your pre-market routine creates consistency, and consistency is what creates edge over time. Consistent actions leads to consistent results. So if you're doing the same thing over and over every single day, you are gonna get a pretty much like a much more predictable results, right? Like I said, it will not guarantee you'll win, right? But it will increase the likelihood of you winning. It will increase the likelihood of you actually catching the A plus setups, catching the outside returns, because now you have done the preparation. Now you're telling the market that I am ready to spot the opportunities when they do appear. So now I'm going to move on to the entire trading plan. So the next part is very important, because this right here is going to be a simplified mechanical trade plan that you can use. And when I say mechanical, I mean there are rules. There are rules that actually govern the entire trading system. This is not based on guesswork. This is not based on emotion. This is based on tried and tested rules. Okay, when I go into the market, I'm not just eyeballing it. I'm not just relying on gut feeling. I'm actually trading it based on the rules that I have in my trade plan. So now I'm going to go through the entire trade plan right here, step by step, and just walk you guys through the entire thought process. First step is to actually do your charting process. The reason why we do this is so that we can make sure that we know where we are trading. This is so that we can determine our trade bias, so that we know whether price is bullish or bearish and whether we should enter for a buy or enter for a sell. All right. So if you look at a 4-hour time frame just like this is where, if you guys know market structure, you will know that when price is creating lower highs, lower lows just like this, we are actually in a bearish downtrend, which means that the sellers are in control, supply is in control, and price is going to continue going down. And then if price is going up, creating higher highs and higher lows just like this, then we know that price is going up. Okay, literally as simple as that. You might think, okay, price has shifted bullish, right? So does this mean price is actually going up right now, or is price actually going down? So this is where I would just really go and map out the structure to really figure out what is my trade bias. Okay, so if I look at this right here, and on my 4-hour time frame, I can clearly see price is creating lower highs, lower lows, right? So price create a new high, pulls back, create a new lower high, goes down, create a new lower low, create a new lower high, and then creates a new lower low before price continue going down even further. So this is the most recent bearish break of structure. And since that's the most recent bearish break of structure, this means that technically this right here is our 4-hour swing range. Okay, so let me just quickly show you what that will look like. So if this is the most recent break of structure, this is the 4-hour swing high, which automatically means that this is the 4-hour swing low. So this is the highest point that led to the most recent break of structure. And this is the lowest point that led to the pullback. So 4-hour swing high and 4-hour swing low right here. Okay, so just by doing this alone, what I've done is that I have narrowed my focus to just the most recent 4-hour swing range, right? The most recent high, the most recent low, that's it. Once again, the reason why we are doing this is because we don't want to focus on what price is doing right here. Okay, we don't want to focus on what price is doing right here. We only want to focus on the present moment. We only want to see what price is doing right now. Okay, so that is why that's always going to be the first step, is to determine the trend direction, whether it's bearish or bullish, so that we can understand who's in control of price, whether that's the buyers or the sellers. And in this case, since price is creating lower highs and lower lows, we know that sellers are in control of price. So by right, we should enter for a sell, right? To trade in alignment with that higher time frame trend. And next thing is to identify the swing range, right? What is the range in which we want to focus our energy on, our attention on? And when you do that, you can see that this is the 4-hour swing high and 4-hour swing low. That's it. That's the first step. Just by doing this alone, I can just really fully focus on what price is doing right here. I narrow my focus to this range right here instead of focusing on what price is doing right here. Okay, so that's the first step. The next step is what I like to do is to actually draw a premium and discount tool. And this is where when we have a discount and premium tool just like this helps us understand whether the market is in the discount phase, right? Whether the market is cheap or whether the market is expensive. Because if the market is expensive right now, if price is quite high right now, then ideally we should expect price to come down back to fair value. And if price is cheap right now, then we are expecting demand to step into the market to cause price to go up. Okay, so that's like the theory behind this premium and discount too. So if I draw these two right here, by the way, just going to share with you guys the settings. It's basically the fib retracement tool on the screen right here, right? So what you can do is to just make sure that you go to trading view or edge flow, whatever tool you're using for charting, go to fib retracement, and this is where you can copy these exact settings, right? So you can just put 0, 0.5 right here, 1, and this is the background. Yeah, this is the exact settings that I use. You guys can take a photo of this right now or take a screenshot, or you can always like rewatch the recording and just copy these exact settings. Okay, so that's the settings. So what you want to do when you're using this tool is to actually map it out from the swing high to the swing low. Okay, so this was another reason as to why we actually map out the swing high and swing low in the first place, is to so that we can actually narrow our focus to this swing range right here, and then also so that we can actually plot our premium and discount too. Okay, so that's the next step right here. Okay, first step was to identify 4-hour trend and structural. Second step is to make sure that we are buying in 4-hour discount and selling in 4-hour premium, right? Which means that we need to map out our premium and discount too. So basically very simple. You want to place this at the swing high just like this, and then place the other end of the tool at the swing low just like this, and then drag it all the way out just like this. That's it. Okay, it's a very simple tool. Anybody can use it. But yeah, like that's just it, okay? And how it works is that this upper 50%, right, above this 50%, which is what we call equilibrium, this is where price is within premium territory. And below the 50%, this is where price is within discount territory. And like I said earlier on, if price comes down to the discount zone, then it's cheap, which means institutions are more likely to enter for large buy orders because it's cheap, which cause price to go up. And similarly, if price is actually within the premium pricing, this is where institutions will deem price as expensive and they will short it, which cause price to go down. That's how premium and discount works. As simple as that. Which means that if price is actually in a downtrend just like this, we want to be shorting when price is within premium pricing. Okay, because this is where price starts getting a little bit expensive, and we can expect institutions to get interested in price for them to continue shorting it. They are not interested when price is down here. Okay, because when price is down here, this is where it's cheap, right? It's not a lucrative price for them to actually enter for shorts at. So they're much more better off pushing price all the way up here, and then once price create a new lower high here, dumping the sell orders and causing price to continue in the bearish downtrend, creating like a new lower high just like this. So in this case, you want to make sure that you are selling at your 4-hour premium. Okay? Selling at 4-hour premium. But the next question becomes where? Okay, where exactly do we actually sell at the 4-hour premium zone? So this is where you want to determine the optimal location to trade. And this is the same location in which you want to be identifying your entry models. You want to be getting your entry confirmation and your entry trigger. And that is the location. So where exactly do we want to be selling it? Well, which brings us to the next step, which is to define your supply and demand zones. So this is something that I teach inside my YouTube videos, inside my mentorship program, which is this concept called institutional zones, which is pretty much the point of interest that smart money are interested in. I'm talking about supply and demand zones, not ordinary supply and demand zones, but like institutional supply and demand zones, order blocks, flip zones, flip plus sweep zones, liquidity zones. Okay, so there are different points of interest in the market which act as the best location for you to actually look for your entry models and your entry confirmation. How do you actually define where is the price point in which you want to be shorting from? So since we have identified the fact that we want to short at a premium pricing just like this, then this is where we want to make sure that we are selling at a supply zone. So in this entire move right here, you can see this entire move to the downside. Where is the most obvious origin point? is going to be situated at the 4-hour swing high just like this, right? So this is where you can use like a box tool just like this. And what you can do is to map out the entire range, right? You can see this entire consolidation just like this. Map out the entire range just like this. Or if you want to be even more precise, you can map out the pivot candle, right? Which is pretty much the candlestick that caused this entire reversal to happen, which is somewhere around here, right? This green candle right here. Because after this green candle, we got this huge red candle that caused price to absolutely collapse. Okay, so that's one supply zone. Is there other supply zones? Yes, there are, right? Because when price actually came down here and pulled back to this supply zone, it continued going down. So this is where you can identify perhaps another supply zone right here. Okay, and then you can potentially see another supply zone right here. Because this is also where another situation where price did a pullback just like this and then continue going down even further. And so on and so forth, right? Maybe there's another one right here. So right here, there are 4 supply zones, right? I've mapped out one supply zone here, another supply zone right here, and another supply zone right here, another supply zone right here. Okay, so what I'm going to do right now is that I'm going to name these supply zones. So the extreme supply zone is A. The next supply zone that I've marked up right here is B. And the next supply zone is C, and the most recent supply zone is D. Which supply zone do you guys think is the most high probability, right? Has a higher chance that price is going to respect? A, B, C, or D? This is where it gets interesting, right? This is something that perhaps people don't really understand. Is the more extreme the zone is, the higher the chance of it getting respected. What I basically mean by that is that if you look at these zones right here, A, B, C, D, if it's C and D, guess where it's located at? It's located near the equilibrium level right here. And if you look at D, it's completely within the discount pricing, which is exactly why it didn't work, right? You can see when price respected D, it made a minor pullback just like this and then just blast right through it. Because of the fact that there is not enough sell orders at that point of interest, because it's at the wrong location, because it's at a discount pricing. And then if you look at C, price did get a stronger reaction at C, but then eventually still blast right through it because price is moving towards premium pricing. Okay, so in this case, C and D is automatically eliminated because price has already like disrespected it, right? So all because of the fact that it's located near the discount pricing, which is not where we want to sell from. And that leaves us with A and B. And this is where it gets tricky because people don't know how to like look for this properly. What I basically mean by that is that when you look at this A and B right here, people doesn't know which point of interest they should be selling from. Some people say that they should enter for a sell right here. Some people say they should enter for a sell right here. But they don't have a clear mechanical rule that tells them exactly when they should enter for a sell, whether that's A or B. And when you don't have a clear mechanical rule, you are relying on guesswork. The truth is, I have absolutely no clue whether price is going to respect A or B. I'm not a fortune teller. I don't have a crystal ball. And the best part is you don't need to predict what's going to happen next in order to make money from this market. All you need to do is to find the point of interest in which you get your entry confirmation from. And when it appears, you take the trade. Without hesitation, without guesswork, without emotions. That brings us to the next part, which is the entry criterion. Because like right now, if I'm looking at this right here, I don't know whether I should enter for a sell right here or right here. Because this supply zone is high probability because it's quite high up in premium pricing. This one right here is also quite high up in premium pricing. But like which one? Which one is price going to respect? Well, the truth is, I don't know. I don't know and I don't care. Because all I want to do is to see the entry confluences appear at either point of interest A or B. So when price mitigate a point of interest, this is where you jump down to the lower time frame. All right, so that's the next step right here. Okay, listen. You don't jump down to the lower time frame until price mitigated the point of interest. So at this point of time, this is where, price have came up to point of interest B. Cool, I'm going to jump down to the lower time frame right now. But if price is still like somewhere around here, and it hasn't mitigated my point of interest A or B, I'm not jumping down to my lower time frame. Very important, guys, because a lot of you guys keep on going down to the lower time frame, look for your sniper entries, even though price is not at an optimal location. So now that price has touched point of interest B, right? My 4-hour point of interest, I've gotten my zone mitigation. So this is where I'll jump down to my lower time frame, which could be the 15-minute or the 1-hour time frame, depending on your trading style itself, right? So let me just remove this right here, just make things a little bit clearer right here. Okay, so what you guys can do is to also add like an additional time frame, which is the 1-hour time frame if you guys want, right? If you guys feel like the gap between 4-hour and 15 minutes is way too much, you guys can always add like the 15-minute time frame as well. No, you guys can always add like the 1-hour time frame as well, because it's like the perfect sweet spot. So this is where once price mitigate the point of interest, just like this, I jump down to my 15-minute time frame or my 1-hour time frame, depending on where is your lower time frame. And the minute I do that, this is where I search for my entry criteria, right? So let me just like close the charting process and I just look for the entry criteria. There are mainly two things that I look out for before I actually enter for the trade. This right here is one of the 10 different entry models I have in my arsenal. And it's the most simple one, right? The reason why I'm sharing that is because it's the most easiest one. It's the one that anybody can understand. So the minute price mitigate my point of interest, this is where I look for my entry criteria. Okay, so like I said, the minute price, beep, touch it just like this, go down to your lower time frame, look for entry model. Two things, liquidity sweep and market shift. Let me go through the more easy one, which is market shift. So if you look at the lower time frame, what happened was that price has shifted bullish. Now, does this mean price is reversing and becoming uptrend right now? No, it just means that it shifted bullish in the short term so that it can actually facilitate the pullback to the premium pricing, to the supply zone that is within the premium pricing. That's why it actually, shifted bullish, which means that this bullish move is just a short-term move, right? It's not the real move, okay? But the internal order flow is bullish right now, okay? That's what matters. The internal order flow is actually bullish right now. So at this point of time, higher time frame is bearish. Internal order flow is bullish, but because it's like really just bullish right now to facilitate the pullback, what you want to do is to wait for this internal order flow to shift bearish. Okay, I'm pretty sure that makes sense, right? You don't want to enter for all sell when the internal structure is still bullish. Because what can potentially happen is that price can continue bullish just like this and just end up taking out the 4-hour swing high and just continue creating higher highs and just continue causing the entire market to reverse. So what you want to do is to wait for this internal structure to shift from bullish to bearish so that you can actually get a confirmation that the market has officially turned bearish and right now it's going to continue with the higher time frame trend. So this is where we can potentially expect a new lower high to be formed. And then later on price come down and take out structure right here. And this right here is what we are trying to catch. We are trying to catch the lower high. And you're able to identify the lower high to your highest degree of precision by waiting for it to come up to a premium pricing and a supply zone that is within premium pricing. Okay, so that's the location. The next formula is timing, right? Timing is pretty much your entry confirmation. When exactly do I want to enter for a sell if I'm looking at this entire move right here? So this is where I'll get interested at the internal market structure. And this is where you can see on the lower time frame, price has created higher highs and higher lows, like I mentioned earlier on. And this is where you can also map out all of your internal break of structure, right? So price creating higher highs, higher lows, right? Maybe this is internal break of structure, another internal break of structure, another one right here. And since this is the most recent internal break of structure, remember, like I mentioned earlier on, you want to identify the lowest point that led to the break of structure, and this is going to be your swing low, and then this right here is going to be your swing high. Okay, so maybe I'll just put that in swing high or internal high, right? However you deem it as. And now the market shift will only happen after price take out the 1 hour swing low. So if I'm looking at this right now, this is the internal structure, yeah? So market shift means what? Means there's a shift in the trend direction of the market. And since right now the internal structure is actually bullish, if the market were to shift bearish, we need to get a break of structure to the downside. We need to see price comes down and take out the last higher low just like this, giving us a market shift, which indicate to us that right now price is indeed shifting bearish, supply has taken control of price, sellers have overwhelmed the buyers, and right now we are shifting bearish. So that is the market shift, right? You basically want to see price take out the last low just like this. So here's where price is at right now. Price is somewhere around here. Okay, so This means that the internal structure is still bullish until price take out this low. If price take out this low, then we got our market shift, and this is where we can expect the entire internal structure to start shifting bearish. If price respect this low right here, comes down, mitigate this low, maybe some demand zone right here, and continue bullish, this means that the internal bullish order flow is still intact, which means we have more room to go. Price is just going to continue going up. So that's the market shift, right? The market shift happens when price take out a structural high or structural low. And in a bullish uptrend, you want to see it take out a structural low. And in a downtrend, you want to see it take out a structural high. Okay, so at this point of time, if I want to enter for a sell to know for a fact that the entire structure is shifting bearish, what I do need to do is to see later price comes down, take out this low right here. Take out a swing low, giving me a market shift. And what I also want to see, which is the second criteria, is my liquidity sweep. Okay, so liquidity sweep is pretty much professional institutions hunting stop losses. That's it. And what you want to do is to identify the price point in which retail traders are placing a stop loss. And that is where the liquidity sweep is most likely going to happen. Basic concept right here, below a swing low, there's going to be liquidity. Above a swing high, there's going to be liquidity. Because if a retail trader is entering for a buy at this swing low right here because they want to trade the reversal, they're going to be placing the stop loss below the swing low. Similarly, if they enter for a sell right here, they're going to be placing their stop loss above the high, and that's where liquidity is sitting. Okay, so liquidity is usually found above a swing high or below a swing low. Okay, basic concept. There's other fancy patterns like double top, double highs. Once again, not going to cover all of those. You can check out my liquidity concepts video if you want to learn more about liquidity. You want price to take out the most recent liquidity. Okay, so over here, you want to see the liquidity sweep happen at the point of interest that you want to be trading, ideally. Okay, ideally, you want to see some form of liquidity sweep happen right here. So the minute price mitigate the point of interest, next thing you should automatically look for is whether price have a liquidity sweep. So you look towards the left-hand side of the chart and you try to identify where is all the available liquidity. Yes, there is liquidity right here. Because this is a swing high, there is stop losses right here. Yes, there is available liquidity right here as well. But what you guys fail to take into account of is the fact that there is also liquidity all the way right here as well. This swing high is also liquidity. Okay, because after all, it is still a swing high. People who enter for a sell, they're going to be placing a stop loss above these highs right here. Ideally, I want to see price take out the liquidity right here that is formed during the pullback phase, and also the liquidity that is formed during the continuation phase on the left-hand side. Ideally, I want to see price take out both of these liquidity. I want to see price come up, take out this liquidity, cause price to reverse, and also take out this liquidity and cause price to reverse. Ideally, I want both. Okay, so that's the liquidity sweep itself. So now, what I do in this case is that if I'm entering for shorts today and I want to get an extra confirmation that price is shifting bearish, I want to see price comes down, take out this low here, and it also swept the liquidity above this high right here, creating like a V-shaped reaction just like this, and also swept the liquidity above this high right here. That's the ideal scenario. Okay, that's generally the ideal scenario. If I get that, then I got my liquidity sweep, I got my market shift, and this gives me the confidence to actually enter for a sell position. Now, there is two ways where you can enter for this trade. You can either enter after price sweep liquidity, right? So the minute price sweep the liquidity from this high and this high, you straight away enter. This is what I call the aggressive version of the entry model. Super duper aggressive because you are assuming that price is just going to go down right now. If you are using this form of entry model, I would recommend you to actually place your take profit at a place where it's actually reasonable. Okay, so this is where we get into exit. So where should you exit, right? So now I've shown you how to enter, right? Which is the aggressive version of the entry model, right? Is you can enter, wait, no, I haven't shared with you the conservative version, my bad. So the aggressive version of the entry model is asking you to enter right after the liquidity sweep. The minute price take out this higher, you enter straight away at this candle right here. Aggressive version of the entry model. Conservative version of the entry model requires you to wait for price to pull back to a point of interest, a supply or demand zone, maybe just like this, after the market shift is formed, after the liquidity sweep. Wait for price to pull back, and then you enter for a sell at the supply zone that was formed at the liquidity sweep or created the market shift. And this is where you want to enter for a sell from. Okay, so once again, aggressive or conservative, it depends on your personality, depends on your trading style. Now, based on which entry model you choose, you want to make sure that you are choosing the right way to actually exit a trade. This is where you want to make sure that if you are using the aggressive version of the entry model, you want to manage your expectation, right? Because at this point of time, price has not officially shifted bearish yet. It's just you assuming that price is going to go down, but that's not what actually happens yet. Remember, we don't trade the market for what we are. No, we don't trade the market for what it is. We trade the market for what we are. So you don't want to impose your assumption onto the market. So you want to manage your expectation. If I'm entering for a sell right here, I'm going to be targeting this low right here. I'm not going to assume that this low is going to get taken out because price has not taken out that low yet. Right? So this is me managing my expectation. This is me trading the market for what it is. And this is where I'm going to be placing my stop loss above the high or above the supply zone right here. So since I'm entering for a sell at this supply zone, I'm going to be placing the stop loss a few pips above the supply zone, just like this. And then I'll place my take profit at the opposing demand zone. Okay, just like this. Manage my expectation because I don't want to assume that price is going to take out this low. This is the aggressive version of the entry model. That's how you manage the trade. You place your stop loss at a price point that invalidates your trade ideal, and you manage your expectation when it comes to your TP. Okay, cool. Now, next up is the conservative version. Conservative version, same exact thing, right? So if you're entering for a sell at like a, let's say a supply zone right here, same thing, you want to place your stop loss above the supply zone, and this is where you want to place your take profit at the opposing supply and demand zone, like this 1 hour low right here as well. If you want, if you already got a market shift right here, then you can go ahead and maybe move it to the next opposing supply and demand zone. But like I said, you don't want to assume, right? I'll much rather off you guys manage your expectation, set it at a price point that is reasonable, that you can expect price to gravitate towards next. And yeah, that's pretty much the entire trading process. Once you do that, this is where you can actually do your full take profit right here. You can actually set a stop loss, set a take profit. And this is where my personal trade management method is that I just choose set and forget. I just make sure that I hold a trade all the way through, right? After I place my stop loss, place my take profit, I don't do partial profits. I don't trail my stop loss. I just take profit all the way through. Okay, so yeah, that's pretty much the entire trading plan. So let's move on to the next part, right? Let's move on to the next part itself. The next part is pretty much going to be the post-market routine. How do I actually make sure that I journal my trades and all that stuff to ensure that I improve my trading performance at all times? Let's say, let's say I enter for like a bunch of trades right here, and then let's say I decide to close a trade over here. By the way, like the minute you actually open a trade, there's this cool feature that allows you to document your emotion, right? So this way we actually record your emotion, and this gets synced straight to the trading journal. So you know exactly how you're feeling when you're entering for the trade. And then the minute you close the position just like this, you will also get a way to actually journal in less than 5 seconds, right? You can take your emotion in there, let yourself know whether you actually follow your trade plan, and type any notes that you want to like type in here. And you can even like do like a voice reflection over the trade itself. Yeah, but anyways, that's pretty much like, let's say today I've actually gotten a bunch out of a bunch of positions. You know, I lost like $242 right here. This is where I will move on to my post-market routine, which is journaling and reviewing. Okay, so first thing first is to go to journal, and this is where I would want to make sure that I actually start to take the time and space out to actually introspect, right? So over here at a high level, you are able to find out whether you actually follow your trade plan or not. Okay, so do you follow your trading plan, right? What was your result for today? What was your win rate? What was your average R multiple? What was the amount of trades that you take? How many trades you win? How many trades you lose? And whether you violated any guardrails, right? Guardrails is pretty much the rules that we have set earlier on. If you violate any one of these, it will be documented right here, right? Just to give you an example on what that looks like, you can see if you actually violate a guardrail, it will show up right here as well. Okay, so like this is where, okay, like for example, this day right here, I traded outside my allowed trading window, right? So this is where it would get documented right here. And you will also see like whether you actually completed your pre-market routine right here as well. And this is also where you are able to see like the amount of trades that you actually journaled. So let's go on to like this trade right here. And this is where I will complete my journaling. All right, so this is where you actually upload your chart screenshot, higher time frame, medium time frame, lower time frame, right? Maybe let me just give like a quick example right here. Copy this image over here, go back to this trade, boom, boom, boom. Okay, so the reason why I actually journal is because journaling is what allows you to actually get feedback. Okay, this is what allows you to actually understand how exactly this is what allows you to get the data points you need to actually improve your trading performance. Right, so this is where I come in, journal, ask myself whether I follow my trading plan or not, right? Look at my trading data in here, put in what are the trade plan that I actually follow, right? In this case, I follow the market mechanics trade plan, put in the confluences that I actually enter the trade on, right? Liquidity sweep, market shift, whatever, put in the trade management method, set and forget or whatever, and put in the mistakes that I commit right here, right? I can just type it in and just add like a tag over here, and then put in my entry emotion and my exit emotion, and just overall add a note or voice reflection. Once again, the reason why you're doing this is so that you can be more aware, so that you can be more conscious of your unconscious patterns. Once again, very important because this is where you get the data points that you need to actually improve. Once you're done with journaling, like I said, go and review your daily trading data. You can also review it on your dashboard as well, right? Where you can see all your high-level metrics, all the most important metrics at a high level, like your win rate, your average R multiple, your profit factor, even your edge score, so you can see how you're performing, not just like qualitative-wise, but also quantitative-wise as well. And also, I like to go and perform some form of like reviewing, right? This is where I actually come here, and this is where I go through a monthly review, quarterly review, annually review, and you can see like this is just like an example on how it works, right? And there's these templates right here which allows you to like just go through that. Okay, there's a bunch of templates in here that you can actually use. But yeah, this is just an example on what I do at the end of each period, at the end of each month, at the end of each quarter. I like to sit down with a cup of tea and just review the trading performance, how many trades I win, how many trades I lose, how many trades I break even, and just overall look at my trading data and actually get the feedback from here, right? Do like a huge process audit, do a huge reflection so that I can make less mistakes and I can understand more of what works, right? The goal of doing this is to just understand your strengths and weaknesses. So like I said, you can do more of what works and less of what doesn't. So after that, I'll also do like a quick little meditation, right? Just so that I don't carry my losses to the next trading day. I just like to do like an overall mental reset. You can do this like breathing exercises in here as well, just to get you back to a mental equilibrium so that you can approach the next session with a logical and rational mind. So that's what my full trading routine looks like. Before the trade, I prepare myself mentally and also my charts as well, and just build context. When I am trading, I follow a mechanical trading plan with clear rules on when to enter and when to exit. And after I'm done trading, I journal my trades, I review my trades, and I use data to continuously improve and refine my trading plan. That is what professional trading looks like. That is what consistency actually is. It's not guessing, not gambling, but having a real process, a real system, a real framework. Because at the end of the day, trading success comes from process, not predictions. And like I said, most traders do not need more information. They need more structure. And when your system is clear, discipline just becomes a whole lot easier. That is the purpose of a mechanical trade plan. To reduce the emotional mistakes, to make your execution more repeatable, and turn trading into something you can actually measure and improve. So hopefully this lesson has showed you that Edgeflow is much bigger than a trading journal software, a fucking trading signal group. It is indeed a full trading operating system that is built to help you plan your trades, prepare for the market open, to execute your trades with guardrails, to journal your trades, and to review your trading performance with more structure and discipline. Because that is what professional trading actually looks like. It's not sexy, it's not exciting, but it's methodical, repeatable, and extremely powerful when you do it consistently. And when you combine the strategy, the routine, the rules, and the software together, this is when trading starts to feel simpler, clearer, and more repeatable, and more profitable. So if you guys have enjoyed this lesson, let me know down in the comments, what is the biggest gap in your current process right now? Is it your trading plan? Is it your execution? Is it your journaling? Or is it your reviewing? Right? What's the missing piece for you right now? Let me know down in the comments. And with that being said, hope you guys enjoyed this lesson, and I look forward to seeing you guys in the next lesson. And as always, remember, you're just one trade away.